right, buddy. Miad, welcome back to F.A.C.E. How are you, bro? Long time.
Hello, Dale. How you doing?
Good, Miad. God, how long has it been since you and I had a conversation? A year or so? Couple
Yeah,
years?
feels like it. Feels like it. How are you now?
These last couple of years feels like a decade. You too? The last couple of years in the markets and everything that's going on. Are you going to share your screen, Mia? Do you have some things you want to talk about with us today?
Yes, I will. Yeah,
Okay.
you're right, man. It's been a really long year.
Yeah.
Putting it behind us as we move into 2022. Hopefully things will pick up and life goes back to normal.
Yeah, I don't know. We have a new normal. Okay, so we're looking at the gold here, buddy.
We're cracking on with gold. Every time on the show, I feel like gold needs to be discussed. It's a great asset. Looking at gold, I think there is a lot of interest where gold is headed as we are moving into this new regime. We just came out of a recession not so long ago, and it looks like there is some interesting indicators to tell us where gold will be headed long term. In the short term, there's always influencers that we might not be able to react to, but in the longer term, I feel like there is one or two things I like to look at that is pointing towards a directional call on gold. What you can see right now is obviously the gold CFD chart on a daily candle. There is some indicators to tell us where gold does move or what it actually corresponds to. There is something that happened last year in August that caused a top in gold, and it caused it to come down. It started to create the bottoming pattern later this April, and got a bit more serious in May.
Then the flash crash low. Do you expect a flash crash low in August to hold, Miad?
Flash crash
low at 1680 level. Yeah,
what happened over here? Yeah.
Yeah.
I've got a thesis about it, but from what I can see, from my perspective, no, I don't believe it will hold. I'm expecting these to give up. Actually, as we're trading lower, and you kind of grab the headline on that. There's a reason why I expect this to come down and gold not sustain these levels in the medium to long term. One of the key reasons for that is the way interest rates are moving in the US. So I'll do a simple comparison chart for you. If I were to look at let's do a simple one, this 2-year yield on the US bond.
Okay.
It is, for those of you who don't know, the 2-year yield is fairly correspondent to what market expects of the interest rate to be by the Fed in the future, right? So higher this goes, the more expectation is of higher rates. And if I were to overlay this with gold, we have gold over here, do a new price scale. If I were to invert my yields, more or less the peaks and the peaks in the bottom, more or less on that chart, does indicate something in here. It's never going to be always a perfect, but we're looking at a cycle regime here. And the time it started peaking out in gold lately was around when the 2-year yields started to make a move, but the breakout didn't actually happen until more recently. But you can see more or less that the yields telling us, look, rates are going up. Holding gold for investors will not be that profitable anymore. If I even go back in the future, again, major turning points, pretty much in line with that. So I'm expecting the same thing again as 2-year yields make their way towards possibly the 1% mark and higher. That will be detrimental to gold, and we're going to see lower levels in the future. And it's really based on the fact that interest rates are rising. So you can take the opposite bet if you think interest rates are not rising, which in my opinion, down the line is not going to happen. So the interest rates will go up. And that's one of the things I wanted to discuss, because a lot of people are interested where gold is headed. And one of the major drivers for it is really about, are investors holding it or not? And this environment, they're thinking rates are rising, it's no point holding that. The other thing I like to
about yield. So when you were sharing that 2-year, Miad, were we at about 0.75%, 0.75, 0.90?
That's right.
Okay, so Fed has plenty of catch-ups to do, even with quarter-point hikes, right? They, after the taper, just to get to where the 2-year is now, would be 4 hikes. almost, right?
Let me actually take you, since you mentioned the hikes, I'll take you to the December Fed Fund futures. Again, for everybody who doesn't know what the Fed Fund futures are, they're basically prices in what market expects by December 2022, the interest rate to be by the Fed. The lower this goes, the higher the interest rate. So market, as Dale just said, market is perfectly priced for 3 hikes. That's the max that the Fed can possibly deliver, or it's feasible that they could deliver. And actually even going a little bit lower than that, which again, Dale is pointing out in his own way that there is a bit excessive here, and we might be too frothy, and the opposite can happen. But again, what I try to explain is the overall sentiment, why we're here, why we're moving in that direction. Yes, maybe the Fed will flinch next year. They won't deliver all those hikes, so there could be a bit troublesome in the market. There's going to be some repricing, so volatility, which is good for us traders. We can take the opposite of that. But a general theme as you go into the next year and the following year is that the Fed funds futures yields are going higher on the 2-year, and all of that is playing out to be not positive for gold. Since we're talking about yields, there's another chart I wanted to talk about. One chart that everybody knows about is called the majority call it the US yield curve. Basically what it is, we are looking at the 2 stands. So if you subtract the 10-year yield from a 2-year yield, you arrive at a figure, which is about right now trading right over the 0.75 basis point, right? For me, this level is very important when I'm trading my yen pairs. Why? Because the yield curve is a benchmark for a business cycle. And if you look in the past business cycle, every time we dropped below 0, a little bit later we had a recession. And every time we peaked, we saw that all the yen pairs peaked with it. And I'm going to do the correlation for you in a moment to just amplify that. But talking about the levels, what's happening in the 10s, what's happening in the 2s, for me, the 0.75 is extremely important to act as a support as we move into the next month. And I really would like this to pick up and peak out somewhere between 0.9 and 1% again, so I can start thinking about shorting yen pairs. There's 2 reasons behind that. One, I don't think the 2-year yield has got a lot to go up. Plus, I think that the 10-year yield will catch up a little bit. That should drive the re-steepening, as we say, in the yield curve. And I'm going to compare this with one of the most probably traded yen pairs. It can be USDJPY, AUDJPY. I take AUDJPY because then we cover the commodity currencies too. So right now we're looking at the daily chart. The orange line is AUDJPY correlated with the US yield curve. And again, you can see that major turning point. I'm actually going to take you back all the way to last recession just to emphasize that even more. So last recession in 2000 and post last recession is more important to me. So in 2009, we sort of created this bottom yield curve. The yield curve started topping out in about 2011 and started coming down, and so did AUDJPY. Then we had another last hurrah in about 2013. And that's when the yield curve just gave up, AUDJPY gave up with it, and you just saw this massive selling as the business cycle gave up about 2,000 pips on that yen pair, and it never recovered until just recently when the yield curve picked up again. So what I'm trying to say is, if you have a good handle on what's happening in the business cycle, what's happening with the yield curve, we've got a really good read on what's happening with those yen pairs. Right now, we know this level is very important for the yield curve, and I'm expecting a bounce. That's why you can expect a bounce from the yen pairs as well. But
what are you thinking, Miad? Possibly a 116 level, take out that prior high in the yen for what could be a major trading top in US dollar yen?
US dollar yen, I don't think we're going to see 116. I would be very surprised if we see 116. It's
a day away, isn't it?
Let's take these correlations away and and just look at UJ. Yes, look at UJ on its own. So looking at this chart here, I'm expecting yield curve to re-steepen a little bit. This will give it a push. I'd be very surprised if you're going to see 116 again, to be honest. I'd like to understand why that's happening, why we see those levels getting punched. But about here, or about maybe max middle of 1550, I will be expecting to see this to start puking again towards lower levels. Again, the whole idea is the yield curve hasn't got a lot to go here.
Yeah, you know what? You could tell when you're you know, you've been around for a while, you know, or you're talking to a guy who's been around for a while, because we all use that regurgitation word.
You do, isn't it? It comes natural.
Because
Didn't even think about it.
I think we've all done it. So anyway, okay, so that's interesting call. That's going to be a big move in U.S. dollar yen, like you know, under par.
Tough call. I like to see this into lower levels, specifically
Yeah.
going into the next few months.
Okay.
Interested with the AUDJPY as well, because that would be more sensitive to global sort of manufacturing and global sentiment. So once you see sentiment really sour, you're going to see AJ create some extreme downside moves as well. As you've seen here, these things happen. I'm expecting these things happen again. So really the thinking is here, it's going to go up. It's not going to go up a lot when you look at the yield curve. And once you see the yield curve is hitting that 0.901 level, you really want to go and start aggressively layering on. That's what I'll be doing, aggressively laying on short on AJ and possibly other yen pairs as well, and to see how far lower we can capture that. There's one last thing I like.
You're looking for a risk-off move during this time period in equities?
I wouldn't call that. Don't bet against US. It's a tough call. So I'm not necessarily saying S&P will go down, but I like to see some global risk off. That would be nice to start getting short that pair. The last one I like to discuss is Euro USD, because a lot of people are looking at it. When I look at my FX pairs, the thing that guides me all the time is yield differentials. So if I were to take the yields from Germany, which is the benchmark for Euro, so the bond yields, and take that away from the US, so we're looking at a 10-year here, it will give me a chart which is called basically the yield differential. If I were to look at that as a whole, it gives me figures and always tends to play in a range. But if I were to compare that with Euro USD on its own, more or less, Euro USD is continuously following the yield spread as a discounting machine. As yields getting contracted, the value of Euro USD starts rising a little bit. As yields widen to the downside, most of a decade, the last few decades, you find Euro USD is dropping. Currently, we saw Euro USD extremely tight in the range. It didn't do anything. It keeps playing around the 113 level, but the yield spread's been moving higher. So I'm alarmed to the fact that even though the street call is the Euro USD will drop to 110, in the short term, we can possibly reclaim November lows again. So that's something I'll be keeping an eye on. I'm not aggressively long yet Euro USD. I'm also very shy shorting it at these levels. I think the risk to reward ratio is extremely against you. So let me take Euro USD back.
Is there anything, Miad, that would have you looking for this dollar rally that we've had all year? You know, the market came in wrong-footed. Everyone was a dollar bear at the beginning of 2021. It was on the COT reports everywhere, sentiment, and we had a pretty good year in the dollar. Is there anything that you see yield-wise in the differentials or construct that could lead towards this dollar rally being close to being over, like US dollar yen is close to being over, and that we could have a bear market in the dollar with what you're seeing? Is there any way to build a bear case in the dollar, I guess, is what I'm asking you.
Yes, since market got really extremely hawkish on the way the Fed should react in terms of the hiking, it painted itself in a corner, Dale. That means if there's anything's going to happen in the future regarding data, regarding NFP coming low, and the Fed starts flinching, dollar is going to take a hit here. That's why you will find that in risk-off environment, followed by bad economic data, USD won't benefit like in the past. USD will get sold as a reflection of the repricing of the rate hikes. Okay.
So basically, the market might be wrong-footed, thinking the Fed is going to be aggressive and they won't be able to complete their mission, something like that.
That's right. And in the past, we've seen it a lot of times, isn't it? The Fed says they're going to hike this amount of time, and then they just keep turning back on what they say. I doubt this time it changed. Inflation is a bit higher, obviously, but still, I think that this time, if it's going to be different, I'll be interested to see. But what's going to cause dollar to sell off is the repricing of the interest rate hikes the market is expecting. So I'll be keeping tabs on that. And the thing that will move the needle on that is either new restrictions coming in, employment slowing down, or any other data that's going to feed into GDP and it's going to make US look weaker than what we're expecting right now. That's the sort of thing I keep an eye on if you're really looking for a dollar bear market. But right now, looking at yield differentials, it looks like Euro USD got space to revisit these November lows. But it's not one of those trades that I'm not actively long yet.
Yeah. Because
my call is still for this to go lower, Euro USD, as the Fed is raising rates and the ECB is doing nothing really. But I'll be watchful. I think we have a clearer vision what's happening with gold, a clearer vision what happens with yen pairs in the big picture. In the short term, it is in a congested zone, and a lot of good things can come out of it.
Okay. Yeah, I really appreciate your views and how you use the yields, Miad. Looking at 2022, is that really most likely one of the best, the plays that you're waiting for evidence to start presenting itself is to short yen pairs?
That's right. I think that will be probably one of the safer bets for me to work with.
Okay. And Aussie yen being your preferred short in the yen pair shorts?
That's right.
Okay. And why in Aussie? Because it is more sensitive to commodity prices and your bearish gold. So that would make sense as well.
It is to do with the commodities, but it's got more to do with AUD yen. It's much more reflective of the risk on risk off environment, much more reactive to the yield curve. With the US yen on the other side, it's still got USD, and if there is USD demand, that USDJPY won't drop the way I need it to, but AUDJPY tends to do what it's supposed to do at the right time. So timing it, AUDJPY tends to be a little bit easier. I would say much easier.
Okay, any view on cable? Because, you know, everyone's so focused on the Fed tapering. Well, all they're doing is tapering. I mean, the BOE, that was an aggressive move, wasn't it? They actually did tighten.
Right, yeah, they did tighten. So looking at GBP USD, the problem that we have here is how much further can a whole tightening pricing get on? Actually, this morning I did long it, but I had to get out of the position because the dip was a bit, I didn't understand the dip, and now it's back up where it's supposed to be. I'm quite constructive on cable, to be honest. If I were to show you the yield differential, it's showing actually it's going to move towards at least a good one or two handles higher. So that's what I'm expecting from cable. I don't want to make big predictions because usually the playbook changes by the way halfway through January with everybody.
Okay.
But for me right now, cable is a good opportunity to get long. Again, try to long it this morning actually, but I was deceived by market action, as we all get sometimes.
Okay, well, it was really great to hear your voice and really interesting presentation of yield differentials and kind of a good prep for 22 to be looking at. We're pretty close to what could be an inflection point in US dollar yen. So appreciate sharing your great work with us, Miad.
Absolute pleasure. It was really good touching base with you again, Dale. Again, we should do this more often. And wish you a happy new year and a good slide when it comes.
Thanks so much, Miad. And the best way for people to follow you, would it be on Twitter, or if you'd like to show your your website and what you're doing and what you're offering people, that would be fine.
You can follow me either on Twitter. It's my name, Miad Kasravi on it. And I share loads of nice lake pictures and sometimes charts as well. I also have a website, speculativestrading.com, where I teach basically the macro view of how to really look at the trading from a macro perspective. Also have a trading room where I share all my setups with position sizing, entry, exits. And I talk a lot about the psychology of trading as well as things happen, how to deal with choppy markets, how to deal with drawdowns, and also how to deal with compounding your gains. So that's all the things I do cover in the trading room. I'd be quite happy to meet you all over there too.
A real pro, my trading warrior brother, Miad Kasravi. So happy New Year, Miad. I hope everything, I'm always rooted for you, and I hope 2022 is going to be, one of your best years ever in every way.
I really appreciate it. Same to you. Best of luck. Thanks for having me.
You're very welcome. Everyone's thanking you, Miad. People enjoyed it. Great presentation.
Smashing.
You could join the team in, looks like 22 minutes on the Morning Edge. I want to thank Paulie for coming in here today and sharing his work, and thank all of you. Have a good day trading. I'll see everyone tomorrow. And remember, most of all, don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.